Welcome back to Teshkid FX for another quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the quant chart, which at the time of this recording has lost a key area of support at around the $110.9 mark. We have also seen a breakout to the lower side out of this head and shoulders pattern that we had here on the 4-hour chart, whose minimum target areas at around the $114 mark we have fully maximized in a breakdown that has now given us a low at around the $106.6 mark. We have also continued to obey the Elliot structures, where I still believe that whatever we are seeing is a corrective structure to the lower side in the formation of that larger Elliot wave count 2. And before I get further into the technical analysis and also give you my next price targets here on the quant chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you the long-term scenarios that I've been expecting here on the quant chart, where you can see that after making the bear market low at around the $40.1 mark, we started this massive bounce to the upper side, obeying the Elliot structures, where I have this Elliot structure in blue having the wave 5 giving us a peak at around the $229 mark, and also completing the formation of that larger Elliot wave count 1 to the upper side. And after seeing the formation of a larger Elliot wave count 1, I was expecting a corrective structure to the lower side in the formation of a larger Elliot wave count 2. And at the time of this recording, in the formation of that higher Elliot wave count 2, we have a low at around the $94.4 mark, and there are chances that whatever we are seeing over here is an impulsive wave to the upper side in the formation of these larger Elliot wave count 3. And there are two possible scenarios that could be playing out here on the quant chart, here on the long-term scenarios, where the first one is that we have seen the low for this higher Elliot wave count 2, and whatever we are seeing here in this impulsive wave to the upper side in the is the formation of this higher Elliot wave count 3. And because of its impulsive nature, we are seeing this 1-2 setup, and after seeing the 1-2 setup, we started this Elliot wave structure, having the first wave giving us a peak at around the $165.5 mark, and after seeing that high, we started a corrective structure to the lower side in the formation of a larger Elliot wave count 2 over here, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, I was able to come up with a minimum retracement area to the lower side in the formation of that higher Elliot wave count 2 between the fib level 0.5 and the fib level 0.78, which is a target area that lies at between the $133.4 mark and the $115.1 mark, which is a target area that at the time of this recording we have fully maximized. And after losing the fib level 0.78 and also the fib level 0.88, which lies at around the $109.2 mark, then that is bringing about an invalidation of this Elliot wave structure that we have right here. And that means that whatever we are seeing here on the charts is not a 1-2 setup to the upper side, and there are chances that we have not yet started that impulsive wave to the upper side in the formation of these higher Elliot wave count 3. And since we have been able to hit our invalidation points here on the quant chart at the fib level 0.78 and the fib level 0.78 in this retracement to the lower side in the formation of this wave 2, that now brings about the alternative scenario that could be possibly playing out here on the quant chart. And the alternative scenario is that there are chances that whatever we are seeing over here is still a corrective structure to the lower side in the formation of these higher Elliot wave count 2. And in the formation of that higher Elliot wave count 2, because of its corrective nature, we also expect to see a 1-2 setup in formation within the formation of that higher Elliot wave count 2, where we can term this whole structure over here giving us a low at around the $94.4 mark is the low for that wave A. Then we started this bounce to the upper side in the formation of that wave B, giving us a peak at around the $165.5 mark. Then there are chances that we might continue seeing the breakdown to the lower side to give us one more leg down to the lower side in the formation of that wave C, and also give us one more leg down in the formation of this higher Elliot wave count 2 to the lower side. So this is the alternative scenario that you can have here on the quant chart, and there are chances that in this 1-2 setup that we had been seeing over here, we can just term this as an ABC corrective structure, having that as the wave A, then a wave B, then a wave C, giving us a peak at around the $165.5 mark, and also completing the formation of that wave B to the upper side. And there are chances that whatever we are seeing after seeing the peak at around the $165.5 mark is an impulsive wave to the upper to the lower side in the formation of that wave C. And because of its impulsive nature, I'm also expecting to see another 5 wave structure in formation within the formation of that wave C, and I believe we are seeing such a scenario over here, having this as the wave 1, then a wave 2 giving us a peak at around the $148.2 mark, and there are chances that whatever we are seeing in this impulsive breakdown to the lower side is the formation of that wave 3 before we can expect a bit of a bounce back to the upper side in the formation of that wave 4, then continue expecting even lower prices in the formation of that wave 5 to fully maximize our target areas to the lower side in the formation of this wave C, and also give us the low for that higher Elliott wave count 2. And there are chances that this wave C to the lower side might just give us a straight sell off to the lower side in case we continue losing other key areas of support, like the area of support at around the $100.3 mark. In case the breakdown continues and we lose that key area of support, then there are chances that we might see a straight sell off to give us one more leg down in the formation of that wave C, and also fully maximize our target areas to the lower side in the formation of that higher Elliott wave count 2 to the lower side. So that is the alternative that I have here on the Quant chart in case this breakdown continues. And I want to request all Quant holders to continue watching the next key area of support at around the $100.3 mark, because in case the breakdown continues and we get to that key area of support, then there are chances of unlocking this worst case scenario where I'm still expecting one more leg down to the lower side in the formation of that higher Elliott wave count 2. And once the higher Elliott wave count 2 plays out, then we can expect an impulsive wave to the upper side in the formation of this higher Elliott wave count 3. And once that plays out, we can also be able to sketch out new target areas to the upper side in the formation of that wave 3. And that is what I'm expecting here on the short-term scenarios, and those are my breakdown targets. And also taking a look at the indicators on the RSI, we are trading at around the 27 mark, meaning we have managed to get into the oversold region here on the RSI. Also taking a look at the MACD, we have been able to print a bearish cross, suggesting that there are chances of continuing to see further breakdown to the lower side in what could be the formation of this ABC corrective structure to give us one more leg down in the formation of that higher Elliott wave count 2. So let's be patient and see how that plays out, and I'll be keeping you updated.